Hey bulls and bears, what is happening? Welcome. You're watching Bull Boom Bear Bust. That is Monday, September 11th, 2023. My name is JJ. I'll be your host today. As usual, back with another dose of economic reality. And yes, we have a big week coming up here. And sorry, I just want to adjust my mic here to get better volume. Big week ahead. We have the CPI number coming out. That's the monthly inflation number, aka cost of living crisis report, as I like to call it. Cost of living crisis is what we're seeing here with U.S. consumers really going out into some deep debt. So far, credit card companies have been very accommodative. Even with record levels of debt, they've been increasing credit lines for the most part. Now, some people, obviously, if you're late on your payments and you're delinquent, you're going to start getting your credit lines cut. But for the most part, credit card companies are increasing credit lines, allowing the debt binge to continue. And the thought is that's going to continue through the end of 2024, if you know what I'm saying. But this week we have the CPI number coming out on Wednesday, Consumer Price Index, and it's very concerning because we're going to see, I think, not only a slowdown. Let me try to think of the way to put this here. We've been seeing deceleration in inflation. Does it mean prices are falling? No, it means prices are rising, just not as fast. But that's been portrayed as positive news on the business channels and everything else. And the stock market's even reacted favorably to a slowing inflation number. But slowing is not good. It just means prices are still going up, just less fast. But I think we're going to see maybe a shock here on Wednesday because not only are we going to see not slowing, we're going to see increasing inflation once again, like we saw from June to July. So this number coming out here this Wednesday, in a few days from now, a couple days from now, is going to be, I think, rising from the previous month. And it's going to be the August numbers, and I think it's going to rise from July. July had risen from June, so we're now seeing this uptick in inflation instead of a deceleration. It's going to begin accelerating again, in my opinion. And there's so many reasons for that, right? We have de-dollarization. We have the insane retail theft problem. So goods and products, when people get maxed out on debt, typically the prices come down because people slow down on spending. But now with all the retail theft we're seeing prices stay pretty sticky. And, I have to point this out sometimes because there's a lot of people that pointed we're calling for a crash in everything: home prices, automobile prices, goods at the grocery store, goods and items at retail stores and department stores. Not happening, folks. We're in an inflationary environment. If we see big deflation somewhere, I'll be very surprised. Another thing too, we also have rising oil prices, right? That's going to make the CPI much more sticky, and I think go back up. And what happens with rising oil prices? It's not just gas. It's not just the price at the pump. So many things are manufactured with oil. So you have that. Plus you have the oil exporting countries. Now many of them are part of the BRICS alliance, and they're trading outside of the dollar. So what's that going to mean? That's going to mean more upward pressure on interest rates, and that's going to mean more devaluation of the dollar, in my opinion, right? So things are really going to start accelerating here. So we'll have to keep an eye on it this week. What do you see for the CPI number this Wednesday? Please let me know down in the comments. I think it's going to go up. Could they just come out with some phony number? Absolutely, but it's beginning to be very difficult for them to hide the real numbers, right? If they come out with a number that says it dropped significantly, people are going to be saying, "What do you mean it dropped? Look at my monthly expenditures." Does anyone look at their monthly expenditures and say, things are getting more affordable? So I don't think they want to lose credibility. So they do have to have some resemblance of honesty, I think, in that number, even though it's a really flawed number, the CPI. Pretty much all the official numbers are highly cherry picked, flawed, and way off target, right? Just take a look at one other example, the unemployment number, right? They're saying unemployment's under 4%. If you got 100 million people out of the labor force, it should be way above 20%, closer to 30%. But they don't count, certain people that are long-term unemployed, people that are no longer looking for work, etc. Once they're out of the labor force, they're no longer counted as unemployed, even though they're not working, which is unemployed, but you know how the official numbers work. So, right, we have to keep an eye on, you know, the official numbers, because we can see trends even in the official numbers, even though they're very, very highly flawed, right? So what else is happening this week? Well, here's something that I've been keeping an eye on here recently, and that's this UAW workers, United Auto Workers union, possibly going on strike. And there's articles out here like this one out of CNN. An auto strike looks likely. Should I buy a car now? And I talked about that a few months ago when I bought a car. I said there's some threats out here that could make car prices start going back up. You know, the chip situation with what's happening globally with the chip manufacturers. And if the strike happens, that could cause big disruptions in supply chains and cars being manufactured. So it could make prices go back up. Scary thought, right? Auto strike likely. So what's happening? It's going to be this Thursday rather, is the deadline. September 14th deadline looms in a contract dispute between United Auto Workers and automakers, including Ford and GM, with workers threatening a strike when their current deal expires on Thursday. So also let me know what you think about that. Will there be a strike, or will they reach an agreement? I think they'll reach an agreement, but if not, look out, because it could be very, very bad. Car prices, haven't really come down that much. But that's a big thing. That's the second biggest item that people will purchase next to a home. Home being the big ticket item that most people purchase in their lifetime, but vehicle number two. And with these high vehicle prices, high prices everywhere else, this is going to just add to the stack of things that are just weighing on the average working person, right? So definitely something to keep an eye on. Also, we've seen the stock market under some pressure lately. Reality is seeping into stock market investors, and I don't know if they're believing the official numbers or they believed that a falling inflation was something good. Deflation would be good, falling prices would be good, but prices still going up, even if it's a smaller amount, is definitely not good. So maybe they're starting to, I'm talking about the traders and the billionaires that basically run the stock market. Are they starting to see some economic reality, realizing that this high cost of living, this cost of living crisis is here to stay, and it's about ready to get worse? I think, look out in the stock market if you're an investor there, and if you have a lot of money tied up in the stock market, just be very, very careful. A few other items here I wanted to touch on today. On the topic of the cost of living crisis, child care now costs $1,000 a year more than college tuition for child care. How do single parents get by? I couldn't imagine being a single parent and having to drop my kid off at a daycare somewhere, or 2-3 kids, who knows, and you're paying more than college tuition. I mean, what do you do? And then maybe you have college debt on top of that, and you're trying to work, and how are people making it here? In fact, the average in the United States child care now is $1,031 more than public college tuition, according to a new report out of Net Credit. How are people getting by? You let me know. It's nuts. Well, we know why they're getting by. I don't know why I'm asking the question. They're getting by going further and further and further into debt. And there has to be a breaking point somewhere. Unless they do some massive debt forgiveness, writing off like a bankruptcy type of thing where they just write off everybody's debt, people are going to hit the breaking point. People are already starting to hit the breaking point as we see bankruptcies increasing, foreclosures increasing, credit card delinquencies increasing, just loans of all sort. Delinquencies and late payments are increasing, right? So obviously people are starting to hit the breaking point, but I think it's going to accelerate, and I think at one point we're going to see the markets react very severely to this. Now, typically, if you look at the stock market, there's always this positivity. It's a stair step on the way up, but then all of a sudden there's something huge that scares the market into a huge drop. So it's a stair climber on the way up, but then it's an elevator on the way down. It goes down so quickly, right? So I think one day the markets are going to sell off. They're going to finally pull the trigger on. Everybody's going to hit the sell button at once, saying, "Oh, now we finally realize inflation's here to stay," and they're going to do that all at once so they can get out before everybody else, and all the retail investors will be stuck holding these stocks and be bag holders. But really, everybody should have known that inflation wasn't really going away, and that the cost of living crisis is not going to be cured, because really nothing's being done to cure it, but everything's being done to make it worse. Throwing money at the problem, throwing gasoline on the fire, is it going to fix anything? I think the answer would be no to all my viewers here. Crazy, right? So let's get into some other news, though. Let's talk about what's happening over in China. Youth unemployment in China hit 50%. 50%. The younger generation must inherit and carry forward the spirit of self-reliance and hard work, abandon arrogance, and engrave the passion of youth in the water, just like our parents did in the monumental of history, declared Xi Jinping, if I can say his name right. Youth unemployment across China continued its rise this summer. Official number approached 21% before Beijing halted its publication. Wow. So they quit printing the number because it was so dire. Unofficial estimates stretched nearly as high as 50% when one counts the lying flat, a term adopted by youth who are choosing to quit the rat race altogether, kind of like the unemployment rate here in the United States, where we have 100 million out of the labor force, but the official number is less than 4%. So they're doing the same thing over in China. They're putting out numbers that are way off the mark, I think, to not spread much alarm. But the reason we see such a high youth unemployment over there is because less demand for their products. People are slowing down on spending, with just the cost of keeping a roof over your head and getting a meal eating up most of people's paychecks, and the cost of filling up your tank eating up most of people's paychecks. So buying less stuff from over there, and we know that most things are manufactured over there. So very interesting what's happening in China. Global economic crisis here unfolding in many countries and in the United States as well. It's just most people haven't recognized it yet. Also, something else here that we have to touch on that's threatening to make the cost of living crisis even worse is another hurricane coming. So now we've got another one coming up the East Coast here. It strengthened from a tropical storm to a hurricane on Wednesday, will likely become a major hurricane by Friday, and a Category 4 hurricane with winds up to 150 miles per hour. It's now in the Atlantic Ocean, expected to intensify. So there we go. That's going to be something else. See, anytime we get massive destruction, that's going to cause the materials to really go up, right? Imagine how much materials are going to go up to be the cost of materials shipped to Hawaii. Imagine how much more expensive they're going to be with all the destruction over there. And every time you see a hurricane and massive these fires, everything, big areas being wiped out or impacted, the cost of items to those areas are really going to increase, and that causes just the overall increase too, just in the industry, right? So another inflationary force, to keep an eye on. Now let's talk about shrinkage at retailers, another inflationary force. They have to raise their prices on everything else to make up for all the items that are walking out of the store that people are not paying for. And we always see this in countries that undergo an economic collapse. Shrink and theft losses nearly $1 billion at Lowe's. So this is a recent report out of CNBC. So all retailers are feeling this. And it's only going to get worse, right? It's going to, not only is it going to get worse, it's going to accelerate. How quickly it's getting worse is going to it's going to be much faster. So it's going to get worse much more quickly. CNBC analyzed the balance sheets of 7 retailers to determine how much money they're actually losing from shrink and retail theft. And they looked at Dick's Sporting Goods, Foot Locker, Lowe's, and several others. And also what they're finding is a lot of it is internal theft. A lot of employees taking things. Maybe they are giving themselves a bonus. Maybe they feel like they're not being paid enough. Or maybe they're just buried under tons of debt and they can't afford the things they need, so they're stealing from their employers. Either way, not good. Honest people that do pay for their purchases are going to be paying the price for it. Paying the price literally, right? Let's talk about the housing market. The average home now, median home, costs about 8 times the average income. It's a new record. The unaffordability has never been this crazy. Worse than 2008 before the housing bubble went bust. But yet we have articles like this. Wall Street Journal. The fall in home prices may already be over. So that was the housing crash that you saw. What, a 1% drop in some areas. More in other areas like San Francisco, but tiny drop altogether. Redfin. Home prices continue to increase despite decreasing demand. Let's see here. Markets Insider. Housing market paradox. Blame the boomers for rising home prices. So they're trying to justify why home prices aren't coming down, and they're going up. We had Zillow come out recently saying that home prices are going to go up 6% in 2024. In the meantime, in the background, Zillow is giving out 1% mortgages, folks. Crazy! You can't make this up. It's a cost of living crisis. I mean, what else would you call it? Please let me know what you would call it down in comments, or I'd like to hear. I call it a cost of living crisis, massive inflation. It's going to hit hard, folks, and things are going to accelerate. Unemployment's going to accelerate. Costs are going to keep rising. You may see some price breaks here and there. Like we saw a break in oil prices, for a while. But what are we seeing now? Oil, $87 as I'm reporting this. And I'm reporting this before market open, so it could change somewhat before that. But 87.08 here as I'm reading it here. So get ready, folks. Keep stacking as always. Hope you guys like this report. Please make sure you like, subscribe to this channel, hit the notification bell so you don't miss a report. And we're going to keep on top of all these things for you here. And especially now, it's very important to keep an eye on these things and know what's coming and know what's happening. So everybody, hope you're good. Big love now. Bye for now. Peace.